great insight into using the Chameleon platform and what may be going on in the markets. How you doing, Dima?
Good morning, Will. How are you?
Great. Before we get started, why don't we start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen. So I think what we'll do is today will be Q&A. Anybody have any questions, you can put those in the live chat. We'll monitoring that. They'll read it back to me. Or we're also putting a link there that you could click on and go to Zoom, raise your hand, and you could ask your question live. You don't need to turn on your video camera. Questions could be anything, Market Chameleon tools, data analytics, that you're seeing, things you've experienced that may be working for you or not working for you. You want to share some strategies, you're welcome to come on the show. We'll discuss and, share it with other members of the community. This way, it helps everybody, because part of trading, no matter, tools you have or analytics, most of it is education, experience, that trumps everything. So while we're waiting for any questions to pop in, I'll just start out with the pre-market report. We'll see what's trading in the pre-market hours. If we don't get questions, I'll just kind of hop over to some reports kind of that we started to get to last week but didn't fully finish.
All right, perfect.
All right, sound good. So this is the pre-market report. These are stocks trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers list, biggest percentage decliners list. Down here, I see 89 stocks made our percentage gainers list today, 224 in a percentage decliners list. So from that perspective, looks like we're setting up for bearish bias at the open. Let's take a look at the S&P 500 stocks to see if we see a similar situation there. So I'm going to use these filters up top that controls the list below. And by selecting in ETF, I'm going to select SPY. This will filter the list by the SPY holdings, or SPY is the S&P 500 ETF. And we see here, by doing that, I got 15 stocks that made our percentage gainers list. In here, 36 on a percentage decliners list. So a little bit more than 2-to-1 favors the bearish side at the open. So this is the pre-market. If you don't have any questions, will come up yet. I'll kind of move on to, I think, some of the questions that we had left over from last week.
Sounds good.
Okay. So one of the questions, I think, was looking at the implied moves, and I forget what we might have been stopped at SPY. And what we did was we looked at the daily implied moves versus the realized moves. So this here is going back like 2 weeks. And when we look at options implied volatility, the options themselves, if we use the Black-Scholes model to derive the implied volatility, is telling us this is the average daily move that the options are expecting, right? The average daily implied volatility. And we could compare that to what the stock actually moved, right? So here, the bars here, as we could see, that's kind of what if we take the very near-term expiration, use Black-Scholes to figure out the implied volatility and what the implied daily move is, then the next day, we compare to the actual move, we could see if the stock moved beyond that range, right? Because the implied volatility is up or down. That's why I got the bar. And you could see here, there are days that it moved to the downside beyond the range, down up here to the upside, and sometimes it was just within that range. So that's kind of comparing it to the daily moves. Then we also took a look at, well, what about the weekly or inner week? How did the straddle do? So when we talk about the move, we're really looking at the straddle, right? What is if you're buying a call, buying a put, you're basically looking for a move that has to cover the cost of both those options, the call and the put. So it could move to the downside or to the upside, but the stock has to move enough to cover the cost of that straddle. So think of it as like betting on an over and under magnitude of the move. And we took a look at, I think under tools, and I believe it was, what was the, sorry, I don't think it was here. Was it the events? Oh, sorry, here it is, at the money straddle. So if we look at that, the money straddle here, we kind of capture in the last, I think it's like 12 weeks here. We capture the price of the straddle on Monday, take a snapshot at 10 a.m. And then we track that straddle price from Monday to Tuesday, to Wednesday, Thursday, Friday, just to see how that straddle performed on average. Did it tend to be more expensive in the beginning of the week, or did it tend to be underpriced or cheap at the very beginning? And when the stock moved, the straddle usually, was it profitable or unprofitable from the long side? And here we showed how the stats looked for different days. From Monday to Tuesday, we could see 67% of the time that straddle appreciated. Monday to Wednesday, 58% of the time it appreciated, and so on. And we looked at the average returns, median returns, min, max, and standard deviation. So we kind of stopped there. So the question is, what if we wanted to screen for straddles week to week, just Monday to Friday, and we wanted to look at 12 weeks or higher or less? So that comes to this screener over here. So I'm going to go into option screener, and I'm going to do, straddles and wing. And in this screener, there's a couple things going on. We could screen for the straddle, just like we were showing before. We're buying the call, buying the put. That's the straddle. And we could also look at the wings. What about just the 25 delta call? If you bought the 25 delta call in the beginning of the week, how did it tend to do by Friday? Or the 25 delta put, how did the put tend to do from the beginning of the week to the end? But with options, there are also, besides doing that, the money straddle, you could hedge that straddle or not hedge, right? So as a professional, if you're trading the Black-Scholes, you are looking at the realized volatility versus the implied volatility. So at the end of that day, if the stock moves and you have a straddle, let's say, the stock's at 100 and the strike prices are at 100. If the stock moves to $104 the first day, well, that straddle now has a delta, right? Now the calls are more in the money, the puts are out of the money, and now you don't have a delta neutral, you have a delta. You're long deltas, or you're like long the market in that stock. And to offset that, to be delta neutral, you would short the stock and go back to delta neutral. And the next day, the stock would move again. You get a new delta, you hedge it. So you're hedging your deltas against your position, trading the realized volatility versus your implied volatility. So there we track it using an unhedged straddle, a delta neutral, hedging every day. I'm sorry, delta neutral is you're hedging the original straddle. So if your original straddle has some delta to it, you hedge it, and then there's a daily rehedge. So let's just look at the unhedged. So wherever it was, you bought the straddle on Monday, held it to Friday. So I used these filters. Right now we're set to the last 12 weeks. That's defaulted here. So in the last 12 weeks, we could take a look at how Apple, Microsoft, Google, you see all of them are in here, right? So in Apple, right, we're looking at an unhedged at the money straddle, last 12 weeks, and this is the stats on it. So 58% of the time in Apple, the straddle from Monday, we took the snapshot 10 a.m. to Friday's close. 58% of the time that straddle appreciated, went up. The average of the returns are 18% in those last 12 weeks. The median return, the return right in the middle. So why do we look at that? The average could get skewed higher or lower from outliers. So we look at where that median return right in the middle, that's 2%. Standard deviation, that's how much the returns varied around the average, right? So if you get a high standard deviation, that means the returns from week to week fluctuate a lot. That's 101%. The worst in the last 12 weeks, the straddle from the long side lost 100%, meaning you bought the straddle on Monday, Friday, the stock was basically, at the strike, you lost 100% of what you paid for it. The best return in the last 12 weeks, 246%. And this is the sharp that's showing us if we took the average return divided by the standard deviation, right? So you want this, the higher this is, the better that ratio is considered, because you want higher return for less variability. All right, so if we took a look at it, we click on view, and this shows us the last 12 weeks. We see there was an earnings in there. There might have been a pre-announcement, but this is, I think this might be even longer than 12 weeks, it looks like. But this is week to week. So we see last week, the January 14th, options expired. Beginning of the week, the opening, the stock was here. This was the snapshot, call midpoint, put midpoint. So the total would be, that would be the total value of both contracts. So what did the stock need to move to break even? At least 3.3%, right? So that's what this is looking at least a 3.3% move. So this is starting January 10th, 10 a.m. We come down here, January 14th. We take a snapshot 1 minute before the close. This is where the stock was. So it only moved 2.2%. So you could see here that straddle on last week lost 42%, right? So start of the week, this is how much it was. This is where it ended, down 42%. What if we did it delta neutral? So we hedged the original delta, it would have been down 39%. So the loss was less than if you just held on to it without hedging your initial delta. What if you did daily rehedge? So then you hedge delta neutral, you use that strategy. The loss was only 20%. So for last week, it would have been better to rehedge the deltas, right? Not to let it go, but daily rehedge. We could compare that week to week like this, right? So the prior week, you could see Apple had a bigger move. So start of the week, that straddle was $429.50. And this is where it finished up, 781, 82% gain, so forth. All right, so that's how to take a look at the week-to-week straddle performance. And if you wanted to filter these by, stocks in your watch list, you could do it this way. If If you wanted to do it stocks in a particular ETF, you can do it this way, like S&P 500 stocks by market cap, average volume. So you have that ability up here. Let's take a look at maybe a 25 delta call. So here's a 25 delta call, upside call. You could see an Apple, that was profitable 33% of the time last 12 weeks. But on that, the average return was 76%, which is telling me we had a very high winner in there, right? So there's potentially one, maybe more, where that stock was up by a significant amount and it had an out of the money call that appreciated. And I could see here one big return, almost 900%, right? So it doesn't happen frequently, but you could see here that you could have one, right? It only takes one to really blow out the whole thing. So let's just take a look here on the view, right? And I'm just going to try to find that one in here. So here it is right here. So that 1 week in November, looks like the stock increased. It was up like $10 for the week, but that out of the money call went from 81 cents to $8. So you could see here a huge return, right? There's another one right here, 750%. So you could see here that what this is saying is it doesn't have to happen frequently, but when it does happen and it's significant enough, on average, that return was positive, right? Last 12 quarters, if you did that strategy, on average, 76% return. So let's take a look at the hedge. So that's unhedged. What if we just decided to hedge the 25 delta calls? So daily rehedge. So here, if you daily rehedged, that would have been worse, right? Why is this the case? Well, if you're long a call and the stock is going up and up and up and up, and you leave it alone, it'll appreciate. But if you're hedging that delta, and as the stock is going up, you're shorting stock to stay neutral, you can see here that strategy lost on average 13%. Had a higher win rate, but the average return was down 13%. So that's ways to compare different strategies using different methods in the screener. So any questions yet, Will? You're on mute, Will.
Sorry, still coughing and sneezing. Didn't want to interrupt you. Rob had a question earlier when you were comparing the straddle out over a week, how it performed daily. Was that available in a graph anywhere or strictly on the spreadsheet?
Wait, which one?
You were comparing how the straddles. It was earlier. You were comparing how the straddle performed over the course of a week.
Okay. That in the SPY.
Yeah, he was asking if there was anywhere that was in a graph format.
So let me come back to that. I think it was this one. So this one, we don't have it in a graph format because you get, lots of different scenarios here, right? It's not just the week, but you have it inner week, right? What if you did, if instead of Monday, what if you started on Tuesday, or started on Wednesday and held it to Thursday? So there are many different scenarios that it would to graph there. That's why we presented it in table format, so you could see side by side, right? You could just scan like with your eyes and be able to see, how each one compared. So the average returns, the win rate, or what we call win rate, is the frequency of times it was profitable versus unprofitable in that data set. Okay, so this is probably best because there are so many metrics here to compare versus each other. We just decided that the table format would be the best way to display it.
All right, perfect.
If that's okay. Yep.
He also had a question about, he had been reading an article over the weekend and an analyst was talking about cash flows. We haven't looked at the fundamentals in a while. Is there a way to screen for stocks with positive cash flows in the fundamentals?
When he says cash flows, I'm not sure, like, because different people could be referring to different things. Is he talking about, like, I don't know.
Well, I'll read the exact
Let's do
question.
Okay.
He said, on one of the morning financial
Like
news shows this morning, one analyst stated that in a choppy market, positive cash flow is one of the best indicators for investing. Do we have that in any of the filters? So he was at, so it basically just positive cash flow is all he says.
I mean, if he means like cash flow for companies, we would have it in here in the fundamentals. These are coming from, the here's a quarterly one, like say for Facebook, but
yeah, I'm assuming that's what he's referring to.
Right. So these are like the cash flows, right? The thing with cash flows, if that's what they're referring to, cash flows from fundamentals, and I'm looking at Facebook, right? And it's got, this is its quarterly ending cash. And then you have a negative or positive cash flow. But cash flows could be coming from three different places, essentially, three major different places. One is it's going to come from your operating, right? You have operating cash flow. That's cash flow that's coming directly from your core business, right? So let's just say Facebook is advertising, just to make it easier. How much positive or negative cash flow is coming from their core business? Then you have investing cash flow, right? So these are cash flows that could be coming from different types of investments you've made that is not coming from your core business. Like maybe a simple one example, like I use like Tesla. If they bought Bitcoin and held on to it, and then they decided, like, I'm just going to sell the Bitcoin, and you made a 50% return. Well, that's coming from your investments, but that's not necessarily mean that your business is making that much money, more money. And if he lost, it doesn't mean like your core business is making less money. It just means you made an investment. Could have been speculative investment. You could have made an investment in maybe a building, that you're using, and then you just sold it and it appreciated or depreciated. Maybe you held some stocks or whatever, treasuries. So these are coming from investments. So they get lumped up into total cash flow. And then you also have financing cash flow, right? So financing cash flow is if, let's say, you needed to raise money and you sold more stock. Well, when you sell more stock, you dilute investors, but cash flow comes in, right? So all of a sudden you got a bunch of cash flow that came in, and that doesn't necessarily mean that it's going to continue and it's coming from your core business. So you have to take that into consideration. Where's the cash flow coming from? So that would be in finance. You could have issued bonds. If you issue bonds, cash flow comes in, but you can't. That's not sustainable forever. You can't use that as a business model. Just continuously issue bonds and not have a way to earn money and pay back the interest in the bonds. Preferred stock, and sometimes you retire them. Sometimes you buy back stock. Sometimes you buy back bonds. You redeem them. You buy back your preferreds. So that would give you a negative cash flow. So you could see here, like in Facebook, right? The change in cash flow, it was negative 1.5 billion, but their core business, from continuing operations increased. So even though they had, their cash flow net, on net, there was a decrease, but their core business increased. So you could kind of see like this, their ending cash kind of went down, but where did it come from? Well, operating cash flow has been going up, but finance and investing went down. So that's just one thing, kind of like when you're doing cash flow, there's a lot of things to consider there. You could come here and take a look at it, but those are the three kind of main things that we would reference. What did the cash flow do, and where is it coming, where is it going? Where are the inflows coming from, where are the outflows going? Is that helpful? So I don't have
Let
a way
us know,
to
Rob. It's
screen.
helpful to me. It's very interesting. Thanks, Steve.
Yeah. But if you're looking for an individual stock right here, it's in the cash flow, and you kind of want to then look into it further, right? Because if you just take this one number, I never think that this is enough. We could, even if you screen for it, I don't think it's necessarily enough. But we do have, let me just take a look here with fast cash burn rate. So in this report, we do look at the cash that we look at, if there is a negative cash flow and your cash on balance, it keeps decreasing, and that you might need to raise more money. So if you're burning cash quickly, and it looks like, how many months away are you before you either raise, either you get much more cash flow from your operating activities, or you're going to need to raise more cash. So it's either you're going to have to tap into the secondary markets and sell more stock, sell bonds, sell preferreds. But if you're burning cash on a monthly, here's Carnival. If they're currently burning cash at this rate on average, and the last time you reported you have this much cash on balance, right, then you only have 16 months left, before you get to zero, meaning that this part has to change, or this part has to change, before, or you're going to be forced to seek out more money, right? So either you're going to improve your profits and get more money from your operating cash flow, decrease your expenses. You're going to have to sell something. So here's your shareholder equity. So maybe you sell assets, but these are kind of like early warning signs to take a look at. Hey, where are companies currently burning cash? How much cash do they have in hand? How much asset, equity do they have? How much months do they have on the runway? So another thing, then you could go and take a look at what's actually going on. So does that help? Hopefully.
Yeah, that was helpful. Thanks.
Okay.
We did. Apollo had one question. I know we only have a minute left. He was asking about, and I'm assuming it's the newest feature you've been talking about a little bit. He's wondering on the ETA.
Which feature?
I think it's the feature where the new idea screener.
Yeah, so that one, I'm still, it's more involved. So I was hoping by the end of this, hold on a second, this alert, I was hoping by the end of this month, but I'm still kind of working on it. It's pretty, it's pretty involved. So I'm trying to work out the bugs. I'm not sure, because I could give like an optimistic ETA. Maybe to get by the end of like next month. But it's a new feature. The idea behind it is that, right now you could go and scan for trade ideas or opportunities using our screeners. So you could set your own parameters, you could set your own filters, track your own stocks. So you could do these stuff using the Market Chameleon, but this idea is that it will have a central system of pointing things out, right? So like, well, what looks interesting in Dell right now. So it's using our preset filters to kind of point things out, and then you could go do, your own research. And while we're working on it, there's a lot of like bells and whistles in there, things that as we're working, well, we didn't expect this, we didn't expect that, and so all that needs to be worked out. And it's hard to say because it's new. I want to say maybe by the end of next month.
Well, there
Maybe.
you go.
Yeah.
Awesome job, Dima. Chameleons are
All right.
very happy with today's show. We do have a show with Raj and Jake coming up in the next week, which will also be helpful. I know someone was asking about the Discord. I did put the link. Anyone has access to that. They just have to click, and it's a free registration process, and that is run by a couple active chameleons. Great job, D.
All right. Thanks, everyone. Stay safe out there. Have a good trading day, and I hope to see you guys tomorrow.
Trade in peace, chameleons. Have a great day. Bye-bye.
Bye.